Closed sales in Manhattan are climbing, rising year over year for the second time in 3 quarters.
Meanwhile, the number of apartments listed is shrinking, which means we may be on the verge of a market shift here.
So what does that mean for you, whether buying, selling, or keeping your eye on the Manhattan real estate market?
Find out, Real Talk NYC Real Estate Podcast with John and Jonathan.
So let's dive right in and talk about mortgage rates. In the final quarter of 2024, we saw rates go from 6.12 to 6.85%, 0.75% interest rate increase. However, we saw mortgage applications increase 21.3%. Is that because even in a rising interest rate market, we saw increase in mortgage rates, or is there something else at play?
There is something else at play. We have a 60 to 90 day, on average 90-day transaction period. So the quarterly numbers that we're looking at are actually apartments that went to contract in Q3 of last year. What did rates do in Q3? They actually went down that 0.75 of a point. That would increase not only people's willingness to buy and confidence in the market, but also more people financing. On the cash sales side, that was down almost 5% in terms of the overall transaction volume.
What's the takeaway?
So as is the case every quarter that we're talking about these closed sales, we have to see what happens in the next quarter. In Q4, we not only had an increase of interest rates of 0.75 of a point, but we also had the presidential election, which is always a pullback. We will see after the Q1 numbers come out in April as to what sort of effect all of that had on.
So what you're really saying is people need to tune in for the first quarter of 2025's podcast.
It's the
Real
beauty
Talk.
of the podcast. They have to
Absolutely.
watch, otherwise they're not
They got to watch, so you got to keep tuning in. Okay,
so that
let's
moves
move
us over to the closed sales. So the closed sales were just under 2,500 for the quarter, which was year over year increase of 3.7% and just 4 to 5% off of the 10-year average for Q4.
From quarter 3 to quarter 4 in 2024, we saw a decrease of 10.3% in terms of closed sales due to seasonality. It's important for the audience, if they take a look at the graph that we've provided, that decrease of 10.3% was less than in previous quarters.
Yeah,
third
and
quarter
especially
to fourth quarter.
in particular looking at 22 and 23, after the rates had started ticking up, because that happened in March of 22, seeing the difference as we've moved throughout the year and accounting for seasonality, because it's always lower in Q4 than Q3, you can see the disparity. We don't have exact statistics, but if you look at the graph, you can see from Q3 to Q4 in 22 and 23, that delta was a lot bigger than what it was this year. Right. And that accounts for the strength of the market in Q3, because that's when things went to contract. We had decreasing interest rates, increased confidence in the market.
Right.
Inventory still strong, on par with the 10-year average. So all those things led to a pretty active Q3, which then leads to good numbers in Q4 in terms of closings.
Right.
And the last point is the sales above 5 million. So that ultra luxury market, the number of sales rose by 12.5%. People are more insulated at that sort of a price point. Right. That's really representative of the increase in confidence from those Q3 factors.
Right, which makes sense. And that's a good thing for the overall market. That leads us to talking about inventory. We have not seen a massive increase in our inventory numbers. At the end of last year, we ended at 6161. It's like 7.4 months of supply, and it's actually on the lower end of our normal range of inventory in Manhattan. So year over year, inventory has decreased about 3.9% and is only 1% below the 10-year average in fourth quarter numbers. So that means that our inventory numbers have basically stabilized and more contracts are slowly being done. So in the end, our inventory numbers were slightly on par with year over year and then slightly below the 10-year average for fourth quarter inventory.
Yeah. The last statistic we look at is the listing discount, also known as negotiability. Generally speaking, we see somewhere around 5 to 7% of negotiability. In Q4 of 23, it was a little over 7%. In Q4, it was a little over 9%. That also speaks to contracts that were signed in Q3, closed in Q4. That was increase in confidence, buyers stepping up and making offers, and sellers being a little bit more negotiable in order to try to get a deal done. So all speaking to the market dynamic in Q3 when these deals were actually done.
Right.
Takeaways are going to be fairly similar to what we've been saying since we've seen the interest rates hike up since early 22. At the end of the day, you need to make your decision based off of your particular situation. It's hard for anybody any real estate agent that says, oh, the market's going up or the market's crashing or what have you. There's too many factors out there. We just came through a very tumultuous quarter, which will be interesting to see what that effect has on Q1 closings of this year. So stay tuned in April. And the jury's out in terms of where are we heading here, given Trump's moves so far in the new administration. We could see a big increase, a big decrease. We could stay flat. My gut would say we'll have a bump for the spring, which we always have because pent-up demand for people buying and selling is always there in the spring. We will see that. Just to what degree is really tough for anybody to say at this point in time.
My takeaway, given that we're shooting this after the last quarter of 2024, we are continuing to see more contracts being done. That tells me that the sellers are becoming more negotiable. They're becoming more realistic, even though there's a faction of the marketplace that's overpriced relative to the current market state. And then more buyers are becoming more frustrated and anxious to get into apartments, dating that rate and then marrying the apartment. I love that expression. We've been saying that for over a year, and I'm going to keep saying it until we get these rates down.
I know you are.
Rates down. I believe that more contracts will be done in 2025, and we will not see interest rates plummeting. Interest rates, if anything, may be down slightly by the end of 2025. I think it's rational advice, but if a buyer is qualified to buy the apartment and they have a need to move, their rental's coming due, they want to invest in Manhattan real estate, they need a larger apartment, don't try to time the cycle. Sellers are more negotiable. There are realistic sellers in this marketplace, and work with a qualified real estate agent.
Yeah.
That's on the buy side. And sellers, make sure that your apartments look the absolute best that the apartment can look. Stage the apartment if necessary, but pricing is vital in this marketplace.
Yeah, everything ebbs and flows. We try to always guide our clients what's going on at that moment in time, but at the end of the day, the driving force needs to be, we need more space. We want to downsize.
We're having a baby.
We're moving. We're having a baby.
We're getting divorced. Somebody
all
died.
of those things need to be the driving force. And I think we'll see what happens with all the different factors in April for Q1, and it will be a telltale in terms of what happened in Q4, which I expect a decent pullback with everybody's focus being pulled in different directions and interest rates, etc. We shall see.
But most importantly, we will be there, whether buying or selling, every step of the way. How's that for our final takeaway?
Yeah, at the end of the day, primary users that you're going to look at a horizon of 5 to 7 years of a place you want to go to. If you can stretch a little bit and go from a 1-bedroom to a junior 4 or a junior 4 to a 2-bedroom, that gives you more longevity in the space, that's going to be your best capital preservation play. It just increases your chance to actually make money when you do decide to turn and sell. But everything depends on how much it means to you in order to own a piece of real estate, own the place that you're living in.
Even more reason for them to call us.
Call us. We'll talk through it.
So thanks so much for being a part of Real Talk NYC Real Estate with John and Jonathan.
Yeah, and as always, be safe, be healthy, and most importantly,
remain in gratitude.
We'll see you next time.
See ya.